Oh, excuse me, guys. I was just checking out this brand new partnership with a TradingView software. We just got the affiliate link ready. We are going to be an exclusive group that gets it a week before everyone else. However, we do have to test a couple more things in the back end with the people that have running this partnership, so I cannot show it to you quite yet. So far, we got to go back to WeBull. Speaking of WeBull, how's it going, guys? We are about to start our day off. Wow, look at this brand new long screen. Can't even see the you cannot even see the price. So let me pull this in a little bit. Unlock, pull it in. Just bring it on in here. All right. I think that's a little better. We can see which ticker symbols that we care about over there. And how's it going? Good morning, ladies and gents. How is every little thing? Pull it on in here. Hard to fit everything in here. That's why I want to be a little judicious. I want to be a little bit of a judge. Lock. Perfect. How's it going, guys? Alright, we're going to do a lot of technical analysis today. We focus on the news. You guys are going to get the news, but we are also going to start making this a stock channel about focusing on making good plays, focusing on the stocks and the opportunities that matter. And I just wanted to say, hey, good morning, right? Professor Meatball's here. I'm here. And we're excited to have you. Okay, it's getting a little toasty, actually. Gonna take this off, and then we can get started. Jonathan Baldwin, Christopher Katzef, Jason Liu, Javier, Joe H, Hui Young, Joe, Jay Hoger. Ooh, cool, fancy names, you guys. So I got my bell ready. We're just 3 minutes away until the open. And GameStop is just raring to go. Now, the first thing that you'll probably see is that during pre-market, it has just been grinding away, pushing up against that 195, getting over it after dipping slightly below. You see this beautiful, this is paralleled corrective wave here on GameStop, 1, 2, 3. We saw this earlier in the beginning of the day, 1, 2, 3. So this had a drop. I'm going to say from 199 to 183, right? That's a $17 drop. This had a drop from 204 to 191. So that became a $14 drop. If we see another correction early this morning, unless we go sky high in the beginning, we're likely going to see something similar. So a corrective wave here, and we are going to either push through that 200 easy peasy and have some early morning power, momentum, energy, or we are just going to have to hold on tight to the paper hands that come in the morning. That's why we got to get those scissors in the chat for the paper hands. Ladies and gentlemen, I would appreciate us getting that like counter up so that more people can find out about this video, and we are getting in there. Okay, so ITRC, good morning, Caesar. Caesar Romero? I don't look anything like him, I don't think. Okay, getting a little silly here. Oh boy. Oh, okay, I thought one of my videos would have come out. It was a minute-long video that I meant to have come out about the SLR rule. So so after the freaking Home Alone copyright claim, the YouTube has just gone super weird. So I have not been able to. I had like 5 different videos I wanted to clip, and they didn't clip correctly, so that's okay. That's just gonna be something that we're gonna have to deal with. That's just something we're gonna have to deal with. Now, let's see. Ooh, new designs for GameStop here. Oh, Planet of the Apes, Caesar. I'm just joking, guys, of course. Okay, markets are about to open, and taking out that bell. 3, 2, 1. GameStop coming right out of the gate with a little bit of just a little groundhog action, prairie dogging the 195 level of support. Let's see if it bounces off, and it shall. This bounce is brought to you by that subscribe button, of course, as always. Yes, so one of the first things that you'll notice is that, oh, wow, AMC had a fierce 1025 drop. You see that this small, thin part of this candle brought it all the way down to 1025. Now it's back to bouncing between these two and pushing past 1044. This is something that we're going to be able to see a little bit of volatility in the early morning, right? We already have 1.5 million of volume over on AMC side, and for GameStop we already have 500,000 in volume. The options chain is just starting to wake up, so let's see if it has already updated. Last I checked early this morning, it did not. Okay, ding 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 ding. Here we go. Harry is in the chat. What's going on? Okay, so pushing up against that level of resistance. Yes, classic. AMC feeling that low again. Paper hands early in the morning, dropping us off a cliff. However, if this bounces back up, we could easily start wedging ourselves into a bit of an upward momentum reversal here. GameStop also seeing very thin candles, which means high volatility for the early morning. That's something that we expected. Ding, ding, ding. Something that we expected, of course. Okay, so we have today's charts looks like a bunch of cats. This would be a good shirt. So, oh yeah, drop some gorillas for that chat. I just hopped on a chat with Trey yesterday. He's feeling better. He is unfortunately still his eyes under the weather. So I'm glad to hear him in good spirits. However, he wishes that he was here, right? He wants to be here with you guys. So let's get some gorillas in the chat for him. Look at that, bunch of cats for GameStop right here. We have some DD that's called the everything short. I'll take a look at that in just a sec. Of course, we also need the daily morning synopsis. And so doing the great work to gather all of this DD for us in the morning. Stonks. GameStop had pushed very quickly underneath 195 and was caught earlier. Let's see if that option chain is starting to populate. Not quite yet. Good morning, Spoon Platoon, says Miguel. Taco Apocalypse. Really good name, by the way. Taco Apocalypse. We are just gearing up, waiting for a couple more people to jump on in, waiting for a couple more likes to filter through. Guys, remember, we do have pledges. We have goals for this stream. We are looking for 75,000 subs, and I think we can get there today. How many do we have? 74,444. Now that is an auspicious number. We need 60 more for 74,500, or 460 more for 75,000 flat. And of course, that like button is there for Eric Andres to buy 20 shares of AMC. They need all the help that they can get, so let's try and give it that support. Alright, so the stepwise pattern down here is a descending level of support. This isn't the wedge that we normally see for these charts. This is the 5-minute chart. Let's go back to the minute. There is also a bit of a descending pattern here for GameStop, although these tenuous strands might be an outlier as we start to recontest the VWAP. Pay close attention to the MACD and its slope of attack against the signal line. If it starts to quickly overtake the signal line, that could be an indicator for that fast rip action on the minute chart. Ducks in the chat from Tim Apple. We getting discounts today? Could be. Tom R says, quick reminder that your show is awesome. Thanks for dedication and chill stream. I love it. Oh, I appreciate that, Tom R. I really do. Let us keep one eye on GameStop as it gets close to ripping past 200. Right, its high today is 199.35. I know you can do it, little buddy. We're not going to look at you that hard. We're going to give you your time. All right, just take your time. Don't stress out. Don't worry. Be happy. Tim says, Andrew, think the hedgies will use all their ammo today due to the end of the first quarter. It is the end of the first quarter. It is also the end of the SLR rule. And Q1 crazy. Q1 ends. Q1 ends. GME is just edging on the $200. Q1 is over. That's today. April Fool's tomorrow. Not gonna have any jokes. What I might do is upload the Spoon Platoon clip if YouTube allows me. They hopefully will. Hey, Mr. Ryder, he's a mod. He helps the show out. Big scissors in the chat for him. Morning, Andrew. 2:30 p.m. over here, watching and listening from my garden, enjoying the 19 degrees sunshine. Not that warm, but hey, it's better than we've had. 19 degrees Celsius, right? That sounds nice. Oh, I could go for 19 degrees Celsius here. All right, so for yesterday who missed the debacle, yesterday, let me recap it briefly here. Yesterday, a good DD was a link to a PDF. The PDF was fine. However, that lied with the website the PDF was hosted on. All right, so this is the married puts DD that was put on. It was one of the only videos that clipped correctly on my channel. Also, it had really good appearances from Mr. Whiteboard. So the logic was sound. However, the website had some extreme political views. So they took it down. Yeah, also, the important thing about this ordeal is that we learn to respect everyone, right? This is Apes Don't Fight Apes here. What's up, Robert Becker? Thank you for joining the Moon Platoon as a special infantry operations member of the Mo Monkey Army. Meatball is the general of that army, and he's leading you straight to Tendi Valhalla. Spoons in the chat from Chuck Gregory. I'm glad scissors is something that YouTube doesn't censor immediately, because apparently there's something about spoons that YouTube does not like. And I have to show your emojis. Okay, let's see. Solstice says, needs some good GME discount. That's a good name. Solstice. Okay, so pay attention to how GME has been tracing these past few days, right? It during the after hours was trending above its VWAP. However, remember, volume is substantially lower and a different population of people usually trade during the after hours and pre-market. When we saw this this wedge start to appear on GameStop, we could basically predict that this was something that was going to trend GameStop upward here, right? Also known as if the support is barely ascending, however the resistance is descending, that wedge is also known as a bullish pennant. So we have the ability to essentially see that this is going to wedge GameStop upward in the aftermarket. One of the last things that we'll see is this beautiful rip, right? We had a major rip in the morning, paper hands after that, maybe a short attack, and from there we had a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 part subwave, all the way up to 205. This impulse brought us all the way up. We had a small correction, but it couldn't even knock us down to half of our growth, and we ended up the day with around 6% after having a 10% rise, about 6% up. Now we're seeing a little bit of the rising turbulence, but falling volatility, right? So this is likely going to start bringing us into in line right above a 195, or starting to give us the momentum that we need to push past 200. Oh, Stephen O'Brien says, watching, listening with Hugo the hot dog. I appreciate that. That's fun. Let's see. How's Meatball doing? He's okay. He needs to see a specialist. So he is going to be making an appointment with a specialist next week. Really do appreciate you guys. Meatball, he's just his heart beats real fast, and he got a little bit frightened, which frightened the vet. So currently he needs to see if he can accept this specific anesthetic. And let's keep on learning about Meatball as we go, right? Me as a dog father, definitely learning about Meatball. Jake Howden. Oh, sorry for missing your other super chat. I had a question about the new platform. All love Moon Platoon. This new platform is mainly for indicators. I'm not going to be trading on it. Right, this is TradingView, if you guys are familiar, but this brand new indicators here is the CC swing and the CC squeeze. Gives us a better, easier, intuitive understanding of how to use this platform. And you guys are going to be the first exclusive members to look at and use it. Hopefully, I'll see an email later today, and then we can start using it. Start of power hour today? Huh? Maybe as early as that? Okay, so let's see. On to some news. Ken Griffin watching the margin calls and HF liquidation start. The McSqueeze, ladies and gentlemen. Margin call squeeze is on its way. Leaner content. I would like leaner content. Hold on, let me check my Instagram. Let's see. You like Mr. Some people are sending Mr. Whiteboard some love here. Let's just give our wiener content a little bit of love as well. This is from Captain something, Captain Superior. Boom, wiener content. Okay. April 2nd. So on April 2nd, this Friday, the stock market will be closed. This is because of Good Friday. So remember, all those options are going to expire earlier than usual. Shuffle, shuffle. Today will mark the end of first quarter, meaning that the hedgies will have to respond and show their books both long and short. It's simple, right? Shorts need the price to be as low as possible. Trying to hide short interest or FTD or any of that is irrelevant today. Juxtaposed with that is the long positions. They need the price to be as high as possible. Also, they heard today that an hour before the ETFs are rebalancing, excuse me, hour before market close, meaning we could see something happen. Not saying lift off, but it could be interesting. Ooh, okay. But don't give us too much. Don't give us too much hope, Renzo. Holy moly. But as a reminder, if anyone was an indicator of that this squeeze is likely to squoze, this was the ex-SEC regulator giving us a sense that her bet was today on the end of March. So watch the markets, be smart, be rational, and slowly pay attention to what could happen. Keep your WeBulls up. And if you don't have WeBull, it's a good chance to get your 2 free stocks. It's pinned in the live chat as well as in the description. Okay, so remember, we don't do dates, and the hedgies will try to lie as much as hard as possible to get their tendies. They'll lie, cheat, and scam their way to their 4th yacht. So keep your expectations tempered about this, all right? Ape's reading new DTCC rules and hedge funds collapsing. Where Lambo intensifies. Where Lambo. New DTCC filing March 30th. Recalculating contributions for FICC's Doomsday Fund. Ooh, okay. Wow, new DTCC. I can't believe DTCC rules are getting more and more fun. Thank you for the wiener content. Let's get this guy a little bigger. When Kenny G tells you to get naked, as in the naked calls, right? And naked shorts. Naked options and naked shorts. Let's see. The naked shorting scam revealed. All right, this is good. DD from yesterday. We already talked about how they the bad link has since removed. But Ren, those rules are old to be 100% correct, but the methodology. Hey, I'm glad Renzo agrees with me, right? So this is, the rules might be old, and you guys have seen that updated in the description, but the methodology is still the same, more or less. So in that sense, we could have found the Achilles heel. So we're going to see this one and this one. Max Payne, no, not the video game. The sweet spot in the middle of the puts and calls. This means that we stay in a sweet spot where they expire worthless. We help Kenny dig his own financial grave. Essentially, we can bring out Mr. Whiteboard again, but it allows us to have leverage to essentially hurt the bets on both sides. Because if you look at the puts, calls, and options, there are a lot of very low and a lot very high. But in the middle, there aren't a lot of them. So that's why the point of the stock uses max pain. Okay, so let's see if this gets updated. Let's see. Someone says Samuel Ponce. Despite the 300, they have to cover a little forcefully. Okay. So GameStop has pushed underneath that support level at 195. This is something that we can assume is not part of an actual corrective wave, just the ups and downs, like every minute a green and a red candle. It's essentially like an OCD, like I need a green candle right next to a red candle. So we don't see any macro waves just yet. If this is the beginning of a corrective wave, the last corrective wave brought us from here, from 204 to 193, about $9. No, that's about $11. So if the worst we could start to see here is dropping back down to our 187 level of support. I think this is likely going to, since it's still so far away from its VWAP, and the MACD line doesn't seem to be angling its slope downward aggressively, that we're going to likely start to push above and begin a impulse once we can push past the VWAP. If we push past the VWAP and have no trouble hitting the exponential moving average, we should be good to go. Okay. Any nice calls that could be lined up today? Waiting on this to update. So as a reminder, we saw yesterday that there was this Verizon bar ramp here, right? We got bars here. We got $1 million at 160, 3 million at 200, so we're getting close, and 4 million at 300. These are all still relevant because they were just added yesterday. Now on the 29th, as a reminder, we had these strange $25 million worth of deep in the money calls. They could be, they could play into something that happens today. We still are not too sure about the, let's say, the provenance of where these are coming from. Okay, back to Rental, so we can actually finish this quick summary and then head onward. Okay, so as always, I will also take ticker symbol suggestions. We'll have our guest space down here. It's not like we are going to stop looking at our AMC and GME golden boys up above. And if you guys did have something you wanted to cover today, let me know. Okay, so not only does GME have by far the fewest number of shares to borrow, but the fee is almost nothing. It's hard to get a sense of how out of whack GME is with the rest of the universe from numbers, so he made a chart to help us visualize that gap. Ooh, that's helpful. So TCAT, obviously, right? We have almost no shares left to borrow, so the borrow fee is enormous. And for GME, no fees left to borrow, all basically like TCAT, and the borrow fee is always less than 1%. This is an exponential, like logarithmic axis here. So that's ridiculous here. On the x-axis, we have the normalized available shares, right? This is log scale. Wow. Jesus Louises, look at GME. Has fewer shares available as a percentage of its float. They even ran out last week, and yet the borrow rate is almost 0. So this is so out of whack that clearly something crazy is going on. Consider the strong evidence of some kind of collusion between the banks lending shares to manipulate the borrow fees of GME. There is no way the fee could be so low. Yeah. Let me know if I'm still lagging. So yes, this is ridiculous. This is actually a little bit scary to think about because look at it. It is absolutely super duper low. And this is on a log scale. GME and TCAT is basically at the exact same x-axis when it comes to how many shorts are left to borrow. In a perfect supply and demand like environment, there should be a clear correlation between how many shares are left and how expensive it is to borrow them. And there isn't. This is just senseless collusion. Watch it. It will pay. I may have been early, but I'm not wrong, says Christian Dale. Heard y'all like AMAs. Alexis Goldstein is coming to do an AMA on this Friday. Even though the markets will be closed, I will still be live streaming. So, ladies and gentlemen, we have a lot to cover on Friday as well. Now, Kenny can call DTCC his dad. DTCC is the dad now. Be excellent to each other always. Remember, apes do not fight apes. This is always true. Always, always. Apes do not fight apes. And let's see. Daddy's Ghost says that's because someone in the comments explained that's because people lending it are confident that the price of it will be going up soon. So they're making it cheap for the shorts too. I'm not super confident about that idea, but okay. And there's no edits yet, so there we go. DTCC is the new dad. So this is our 13 FHR forms for Citadel. 200 and read DTCC is the dad of the market now. Okay, we've already known DTCC is daddy for a while, but let's see what this is trying to say right here. And then we have, is this? I'm not a financial advisor. Okay, so this is the new DTCC filing, March 30th, recalculating contributions for FICC's Doomsday Fund. All right, just a little bit of the news here. Here's that puzzle put back up. So good. I'm glad that that link still works now. And then the everything short. This was from 12 hours ago. Too long didn't read. Citadel and friends have shorted the treasury bond market. Ooh, okay. Oh, Avatar 2312 says, could you take a look at Ovid and Pet Meatball? You know, I sure can. I sure can. So let's look at Ovid real quick and then back to the everything short here. Citadel and friends have shorted the treasury bond market, so we'll take a look at that. Ovid. If you guys did have ticker symbol suggestions, I'll do like 3 and then we'll go back to like GME and AMC. Oh, Zero Boy says Mavis is heading to the moon. It's blowing up in WeBull. You know what? Mavis is next, and then one more. Oh, well, did you want to hit Pat? This is from Avatar 2312, I think. Yes, Avatar 2312 gives you head pats here. Let's give Meatball, our boy, some tasty treats this morning. Hey, Food Platoon, thank you for joining the Moon Platoon. I know it's you, Reese Beats. You can't fool me. Go check out the Food Platoon channel, guys. Very, very cool. Okay, so Ovid. Wow, some suspicious stuff happening. Look at the VWAP just go on a bender during after hours. So we are noticing here. Let me look and see this here. Some news first. Okay, so the therapeutics company, they reported losses. EPS misses by 4 cents, beats on revenue. Okay, Q4 loss of 34 cents a share. So there's a Q4 loss, but it wasn't that big of a miss. Let's see, there's ascending level of support here. Once again, we're doing just 3 ticker symbols. You guys can suggest what the last one is going to be, but I'm going to do Ovid, Mavis, and one more, whatever you guys want. So I'm going to draw it here. So this was the ascending level of support that we see. This means that there's going to be some issues mostly here with this hard tap on $4.09 roughly. So this gave the Ovid a little bit of trouble. So in terms of that risk reward, I would say that Ovid is pretty much close to its bottom. Now this kind of volatility surprises me, scares me a bit. If you expect it to go back down to the early March levels before this spike, then your risk is accordingly down to $2.80. So you could lose about 30% or 25% of your portfolio. However, it is currently a stock that recovered from a small dip down to $3.80. It is now trying to contest the exponential moving average. I would say that a better entry point would be down where these small dips in the after hours have shown that Ovid is trying to recontest down here at $3.74. That doesn't matter too much to you. Just know that the reward here might be high, coming back up to another impulse wave that brought Ovid all the way up from $4 all the way up to $4.50. Okay, so now we're gonna look at Mavis. Is this what you consider a rip? What is this, a rip for ants? It's up 9% right here. And then just after this, we're gonna go back to GameStop. Okay. Some of these are not ticker symbols. You guys know this. Okay, so Microvision here is making the round. So this is something that I have analyzed before. Let's look on the daily chart to see if I have any lines. Yes, I didn't draw. Oh, yes, I did. So I drew this line. It is now recontesting this $14 and change resistance here. Before it bounced off of 11, just as predicted, it is basically going on this predictable path here. If you expect that the MACD is going to cross over this signal line sometime soon, it might be a good time to jump on right here. If it does break through this resistance, it will likely start to rise above 19. No guarantee that it's going to break through. And of course, at 24 was its highest peak. So I would say right now is an attractive entry point. However, if you did expect it to drop back down to $10, it is likely to be rejected by this resistance level. So as of right now, Microvision, stay cautious, although optimistic. Okay, so people are looking at quite a lot of different ones. Let me see who was first. It's your boy Reese. Salt Platoon. Oh, Yahoo has upgraded GME's short-term outlook to bullish again. Great. Vuzi is up huge. Okay, so Joe Mama was first, so let's look at Vuzi. Vuzi is up 60.9%. Very nice. Let's look at the daily chart. Yes, this beautiful ascending level of resistance and support here shows that we are on a bullish run for Vuzi. We're starting at $4 and now up. Oh man, that's up 500%. Wowee. So we like that, but however, this doesn't give us a lot of room to grow in. Right now, this is starting to trend like a value stock. So one of the first things here is that we can, with the outline of this, trend out the channel that it is currently traveling in. If this channel does hold, you'll notice that you have to take into consideration that right now on the daily line, the MACD is underneath that signal line, likely to say that there is on the daily level a bearish momentum. However, as you can see on the closer inspection, right, 5-minute level, there might be scalping opportunities for Vuzi, right? If you wanted to try to grab it when it drops back down to the VWAP, you could be able to make some delicious tendies off of that. As of right now, for today, seems like it is on part 2 of a wicked impulse. So this is just 3 out of 5 minimum subwaves here. So I would say that if this one subwave was 22 to 23, about $1, you're likely to see this rise up to 25. If it doesn't, it starts you start to see that on the minute chart, the MACD is already starting to push through that signal line. Could be a bear sign as well. However, right now I don't see much outside of a strong growth long-term potential here. So for people who are bullish on Vuzi, I would say right now you're likely going to see some paper handing earlier rather than later. But long term, I would say that this channel is going to hold pretty tight. So Vuzi, back to GameStop. VWAP stands for the volumetric weighted average price. It's essentially an idea of how if volume had a vote, if volume was king, and volume is king, right? But if volume was the only thing that mattered, that is basically where that price would hover. So usually it's a signal for correction, although not always. Let's see. Some of you are actual children. Gorilla Jill, let's go. That was hilarious. Gorilla Jill last time we saw. Music Hunter, hey, hedges need to just die out and let go of AMC and GME. Really getting annoyed looking at my money dip. Hey, it's not realized until you sell. Always remember that. Have that be your shield. It's never over until you sell. I've been told that the I'm not a financial advisor sign is a little too big, so I'm gonna make it a little smaller. Is that better? Yeah, there you go, still on there. Just a little bit tiny. Cute. I want it to be small enough for me to really, like, see it. There we go. Oh my god, so close. My mouse doesn't want to give it the platform it deserves. Fine, right there. So, someone's saying double bottom for GME. Double bottom where? Oh, double bottom for Vuzi. Okay, so this is the everything short. Too long didn't read. They have shorted treasury bond markets to oblivion. Okay, so this might need, let me see if this needs some, okay, so this actually puts together the SLR rule as well. Oh, we need to do some minute-long videos. Some of you like the minute-long videos, some of you don't. That's okay, everyone can have their own choice. Let's see. Because I want to be able to like answer questions in like a very fast manner. So for example, I have here, and then I have to answer this question. Nope, this one. I don't understand this banking thing. If banks force hedges to liquidate to pay debts, doesn't that mean they get to buy back short shares, right? So that's an important question that I want to answer. And then why would banks margin call the hedge funds if they aren't going to be able to cover the banks when they held left the liability, right? That's a question I also want to answer. And that's just SLR. So yeah, since my videos got messed up yesterday, I'm just tempted to just redo them. So I am tempted right now to go through this with the perspective of the SLR is ending today. If you guys aren't aware, that is what's happening. It's a tier 1 finance here. Write this one all the way through the first. That wasn't that a big deal. This one is a big deal. Okay. Let's see. This could be scary. This DD means that the USD could be worthless. Oh, that's not likely. But that's the kind of sensationalist stuff that people are counting on. So this is Mr. Whiteboard from yesterday. And now I'm going to erase. I don't know where the eraser is. Oh, it's all the way over there. One sec. Okay. Ugh. Goodbye. GME AMC eraser. So what I did last time was I put SLR as like money. So like basically all the money that you have. It's a ratio of money over, let's say, houses, right? So like other assets, some stocks, bonds, and there was like municipal something contributions, cash contributions. Let's see. I've been looking at it's buying some QS, new battery company working on solid state and EV. batteries. I think the market is promising. Gates and Volkswagen look so too. Mind checking it out? Sure. We're going to do another round of looking at other companies in a sec. Let's see. What is the SLR? Well, that's supplementary leverage ratio, ladies and gentlemen. That's what I'm going to be doing here. So let's do it real quick. I'm going to add a little marker here. Marker. Okay. Hey guys, the SLR is expiring today. It was a supplementary leverage ratio rule that allowed us to look at this ratio, look at how easy it is for an institution that needs money to have that money in a financial crisis, right? These are tier 1 capital that allows you to basically have near liquidity, and this number should be around 5%. Is a minimum requirement, and we have been seeing the temporary rule knock off a couple of the values in the denominator, right? Since the beginning of the pandemic until today, these banks were able to knock off certain pieces like bonds from the denominator. That knocked off trillions of dollars from the ratio here, which made this easier to be above 5 to 6%. However, today that expires and it's going to be part of something much bigger. So if you watch until the end, you'll learn exactly what the everything short is. Throw this source some love, written by user ATOBITT, right? You 80bit. You guys are going to be able to not only give this post a upvote, but also be able to start learning about how to show this video some love. Drop a like down below and help us grow up to 75,000. We're on our way to 100K subscribers, and we want you to be part of it. Too long, didn't read. Citadel and friends have shorted the treasury bond market to oblivion using the repo market. Citadel owns a company called Palafox Trading and uses them to exclusively short and trade treasury securities. Palafox manages one fund for Citadel, the Citadel Global Fixed Income Master Fund Ltd. Total assets over $123 billion, and 80% are owned by offshore investors in the Cayman Islands. Their reverse repo agreements are entirely hypothecated, and they cannot pay off their own repo agreements until someone pays them first. The entire global financial economy is modeled after that fractional reserve system that is beginning to experience the mother of all margin calls. This is why the DTC and FICC are increasing an increase in SLR deposits. The madness are officially coming full circle. And if this sounds scary, one of the first things that you'll know is arm yourself with data, right? Data is king. That's what we cover on this channel, and I think you're going to make a lot of great movements for your own passive income, for your own financial freedom, if you start joining us down below, either with the subscribe or the join button, and watch until the end. So away we go to understand exactly what is going on here. I'll skip the fluff, go to the most important pieces, and then use Mr. Whiteboard to be able to help us chart out exactly what's some more complicated pieces here. So we have the author of Citadel has no clothes here. They could not shake one major issue. Why do they have a balance sheet full of financial derivatives instead of physical shares? The concept of hedging instrument is to protect against price fluctuations. Hopefully you get it right and make a good prediction, but to have a portfolio with literally 80% derivatives, absolute insanity. It's the complete opposite of what should happen. So what is going on? Let's break it into 4 parts. 1, repurchase and reverse repurchase agreements. 2, the treasury bonds. 3, Palafox trading, and 4, the short seller endgame. We're going to breeze on through and just cover the important pieces here. Step 1, repurchase and reverse repurchase agreements. What are they? They are much like a loan, right? This is a repurchase agreement. If you have a big juicy banana worth $1 million and need some quick cash, a repo agreement might be right for you. Just take that banana to a pawn shop, pawn it for a few days, borrow some cash, buy your banana later, plus a couple of tendies in interest. That creates a liability for you because you have to buy it back unless you want to default and lose your big beautiful banana, right? You can also know it in the financial world as collateral. Regardless, you either buy it back or lose it. A reverse repo is how the pawn shop would account for this transaction. The pawn shop sells a reverse repo and you sell a repo, right? A repurchase agreement is on your side, the reverse repo is on their side. Why does this matter? Well, repos and reverse repos are the lifeblood of financial liquidity. They allow for super fast conversions from securities to cash. The repo agreement I just described is happening daily with hedge funds and commercial banks. In fact, the submitted amount for repo agreements today is 40 billion for one day. This is due on the 30th. So yeah, super short-term loans, usually a few days. It's probably not a surprise that back in 2008, the go-to choice of collateral for repo agreements was mortgage-backed securities. This is giving anyone PTSD because it certainly isn't sounding great. Essentially, if you need money now or very, very soon for a very short amount of time, this is a great way to take whatever you need to whatever you own and then just give it to a pawn shop. But you know, it's not a pawn shop, it is the global economy. So this is a great way to turn into liquidity real fast. The Lehman Brothers went bankrupt because they fraudulently classified repo agreements as sales. You can do this your own research, but they'll give the quick and dirty. All right, here's what Lehman did. Lehman would go to a bank and ask for cash. The bank would then ask for collateral in return, and Lehman would offer mortgage-backed securities. It was great having so many mortgages on your balance sheet, but what good does it do if you have to wait 30 years for the cash? So Lehman gave their collateral to the bank and recorded these loans as sales instead of payables, with no intention of buying them back. This extremely overstated their revenue. When the market started realizing how bad these AAA securities actually were, thanks to Michael Burr and friends, they were no longer accepted as collateral for repo loans. We all know what happened next. Now you basically have the entire short, the big short, summarized right there in this paragraph. The interest rate in 2008 on repos started climbing as the cost of borrowing money went through the roof. This happens because the collateral is no longer attractive compared to cash. The favorite bedtime story is how the Fed stepped in and bought all of the mean, toxic assets to save the US economy. They literally paid Fannie and Freddie over $190 billion in bailouts. So here's the US repo rate. Right, we can see just a couple of outliers, hint, hint, back in 2019, and then today. So the repo rate jumped to levels reminiscent of the depth of the financial crisis before retreating. A few years later, the MF Global would suffer the same fate when their European repo exposure triggered a massive margin call. All right, we've talked about margin calls before. It's when you owe either shares or money or something, and you don't have the ability to ever pay it back. When you get closer and closer, you risk getting margin called. Their foreign exposure to repo agreements was nearly 4.5x their total equity. Both Lehman and MF Global found themselves in major liquidity conundrum and were forced into bankruptcy. Not to mention the other losses that were incurred by other financial institutions. Check this list for bailout totals, right? We'll have that link once again down below. But did you know this happened again in 2019? Right, that's what that spike we saw earlier in that chart above in 2019, the US overnight repo rate. Once again, these are repurchase agreements. Instead of the gradual increase in rates, the whole thing spiked to 10% overnight. This little blip almost ruined the whole show. It's a huge red flag because it shows just how the system must remain in tight control. One slip and it's game over. The reason for the catalyst was once again due to the lack of liquidity. The Federal Reserve stated there were two main catalysts, both of which removed the necessary funds that would have fueled the repo market the following day. Basically, their checking account was empty and their utility bill bounced. It became apparent that another infusion of cash was necessary to prevent the whole thing from collapsing. Reason being, institutions did not have enough excess liquidity on hand. Financial institutions needed a fast replacement for the MBS, and Jay Powell had just the right thing. Fed go brr. We've heard about Jay Powell talking about making that cash printer go, but don't say it's QE. The one thing about Jay Powell to understand is that he controls the US printing machine for cash, right? So this is one of the things that he did back then, and something that we were wondering if he was going to do during that press conference that we covered live, and we will continue to cover his actions as we go along. So that's step one. Now that you guys understand repos, right? If you don't, drops a question in the comment section, right? And let's see the hive mind come and grab it together. Let's see. So we have ever heard of the bond market? Well, it's the red-headed stepbrother of the stock market. The U.S. government sells you a treasury bond for $1,000 and promises you to pay you interest depending on how long you hold it. Might be 1%. Might be 3%, might be 10 years, might be 3 months, might be 10 years. Regardless, the point is that just purchasing the U.S. Treasury bond in conjunction with mortgage-backed securities allowed the Fed to keep pumping unlimited liquid tendies into the repo market. Surely liquidity won't be an issue anymore, right? Now take the repo scenario from the Lehman Brothers story, but instead of using only mortgage-backed securities, add in the U.S. Treasury bond, primarily the 10-year. Note that the MBS are still prevalent at 19.1% of all repo transactions, but the U.S. Treasury bond now represents a whopping 67%. Boom. Let's take a look at this. There's a sheer amount of difference here, right? So average daily outstanding repo, right? And the collateral for repo here. Overnight term is these two pies here. I honestly cringe as a data scientist whenever I see pie charts. However, this gets the point across, right? We had the repo scenario from the Lehman Brothers story. Instead of mortgage-backed securities, we are looking at treasury bonds, right? This is the same story with a different asset. Step 3. Okay, so that was an easy step. Ever heard of Palafox trading? Me neither. But it's pretty much meant to be that way. You see, Palafox trading is a market maker for repurchase agreements. Initially, they appeared to be an innocent trading company, but their financial statements revealed a little secret. GameStop is bouncing off of that 187 level of support. Essentially, what I said, if the VWAP was not contested again, we were likely going to see this sideways trading here. And luckily, we were caught at 180, and we are going to continue grinding along. 187. Palafox Trading is a market maker for repurchase agreements. Initially, they appeared to be an innocent trading company, but their financial statements revealed a little secret here in the highlighted section. Citadel Advisors LLC is responsible for managing all investment and other activities for the company. Citadel Enterprise Americas LLC and Citadel Americas LLC, both affiliates, provide administrative and investment related services to the company. And who is the one with the GoFundMe and the $600 million in bonds? The GoFundMe is a joke, of course, but it's pretty close. I should have known. Of course, Citadel has their own private repo market. Who else is in this cesspool? Citadel Global Fixed Income Master Fund, GFIL, is the sole member of the company. All right, so here is a cool little charting system here. We have how Citadel Advisors pushes securities and cash through Palafox Trading here. So Citadel Advisors is pushing, advising the Palafox traders here. And we have the Palafox working with Citadel Global Fixed Income Master Fund, right? Still a Citadel subsidiary working with the sister arms of Citadel here. Citadel Wellington, Citadel Kensington, Citadel Kensington Global, Citadel Global Fixed Income Fund, LLC and Limited, and then they work with offshore holdings here between the Citadel Global Fixed and the Kensingtons, and then finally these are the shareholders and beneficiaries of GFIL. That doesn't make sense. We're going to cover in just a second here. Everything rolls into the Citadel Global Fixed Income Master Fund. This controls I'm going to count this right now, $123 billion in assets under management. I know offshore accounts are technically legal for hedge funds, but when you look at the itemized holdings of these funds on Citadel's most recent form, gives you chills. On the ADV, it says $123 billion in current gross assets of the private fund. Wow. Okay, let me get it straight. Let's see. The repo market provides immediate liquidity to hedge funds and other financial institutions. Wait one sec. The repo market provides immediate liquidity and hedge funds to other financial institutions. After the MBS collapsed in 2008, the U.S. Treasury replaced it as a liquid asset of choice. Number 3, Citadel owns 100% of Palafox Trading, which is a market maker for repo agreements. Number 4, this market maker provides liquidity to the Global Fixed Income Master Fund, GFIL, through Citadel Advisors. And number 5, 80% of the $123 billion in assets under management belong to entities in the Cayman Islands. Wow. So once again, repos are allowed to give them straight up cash when this is basically a shell corporation that allows them to make repo agreements. The market maker provides liquidity to GPhil through Citadel Advisors, and now $123 billion in assets are under management by a shell company from the Cayman Islands. They just tore Bermuda, Paradise, and Panama Papers apart and found that all of these funds boil down to just a few managers, but they can't pin anything on them for money laundering. However, if there ever were a case for it, they'd be incredibly suspicious of this one. The level of shade on this is incredible. There should be no room for an investment pool as big as Citadel to hide. Absolutely ridiculous. The fact that there's so much foreign influence over the bond and repo market, which controls the liquidity of the country, is very concerning. And once again, they said this back in 08 too. The fact that there was just so much corruption in the mortgage-backed securities was also very alarming. I believe Allison Christensen is asking for my data science guides. They are in Discord, and you have access thanks to the power of Patreon and the power of the YouTube API. So both of which would be able to get you those data science guides, the 66-day guide, which is in the private Moon Platoon private Discord, and the 21-day guide, which is in the private, the Mo Monkey is the one that has 66-day guide. The 21-day guide and the 66-day guide are both in the Moon Platoon private Discord. So Allison, go find it there. Step 4. All right, I know this is a lot to take in. I've been writing this post for a week, so reading it all at one time is probably going to make your head explode. But now we can finally start putting all of this together. Okay, remember how I explained that the repo rate started to rise in 08 because the collateral was no longer attractive compared to cash? That means that there wasn't enough liquidity in the system. Well, this time the opposite effect is happening. Ever since March 2020, the short-term lending rate, repo rate, has dropped to 0%. So the Fed is printing, hold on, let me show you can read this here. The Fed is printing free money, the repo market is lending free money, and there's basically no difference between the collateral that's being lent and the cash that's being received. With all this free money going around, it's no wonder why the price of the 10-year treasury has been declining. So essentially, this is how much it costs to lend out these repurchase agreements, right? And they have essentially dropped to almost nothing. So you can just pass around these repurchase agreements like candy, popped from the take a penny, leave a penny tray. In fact, hedge funds are so confident that the 10-year treasury will continue to decline that they've shorted the 10-year bond market. Not talking about speculative shorting, I mean shorting to oblivion like they've shorted stocks. Don't believe me? Hedge funds like Citadel Advisors must first locate the treasury bond in order to swap them for cash in the repo market. It's extremely difficult to do this with the Fed because they're tied up in the government poopy, so they have to locate a lender in the market. Now, who would Citadel know that's an asset manager? Perhaps the same asset manager that they borrow shares from, BlackRock. Oh, back to BlackRock Bag Holders Inc. It's now obvious that BlackRock was tapped by the US government to purchase their treasuries. Federal Reserve taps BlackRock to purchase bonds for the government. So BlackRock purchased a ton of treasuries and keeps them in reserve for hedgies like Citadel to short. Citadel comes along and asks for the bond. They throw it to the Palafox Trading and collect their cash. So what happens when they need to pay for their repo agreement? Surely to God, there are more bonds floating around, right? Not unless hedge funds like Citadel have shorted more bonds than there are available. Oh man. So they have also over-shorted bonds. This is either recursive shorting or naked shorting. Let's find out. There have been 3 instances over the past year where the repo rate dipped below the failure rate of -3%. On March 4th, 2021, the repo rate hit -4.25%, which means that the investors were willing to pay someone 4.25% interest to lend their own money in exchange for a 10-year treasury bond. This is a major signal of a squeeze in the treasury market. It's a major desperation to find bonds, with the Federal Reserve purchasing them monthly from the open market. It leaves room for a shortage when the repo call hits. If an entity like BlackRock hasn't purchased more treasuries since lending them out, hedge funds like Citadel simply cannot cover unless they go into the market and pay the bondholder for their bond. This literally has the same story as the heavily shorted stocks. It's essentially the exact same 2008 crisis revealed in this DD, but with repos instead of mortgage-backed securities. Now, still not convinced, in the end of 2020, Palafox Trading listed $31 billion in gross repo agreements. $30 billion were traded directly related to the repurchasing of treasury bonds. Wow, now this is the most important piece of the story, honestly. What about the reverse repurchase agreements? Don't they have to assets to buy treasury bonds? Sure, take a look. So they have gross amounts of $31 billion of reverse repurchase agreements here. See there, they had it covered. Now read the fine print. Let's get our glasses on. Typically, the company has Typically, the company has rights of rehypothecation with respect to the securities collateral received under reverse repurchase agreements as of December 31st, 2020. Substantially all securities collateral received under reverse repurchase agreements has been delivered or repledged in connection with repurchase agreements. So, no, they don't have it covered. Why? Because our terrible financial system allows for rehypothecation. That's why. It's a big fancy word for using amounts owed to you as collateral for another transaction. In the event that the party defaults, so do you. This means that the securities which Palafox is waiting to receive have already been pledged to pay off the bonds they currently owe to someone else. Oh, does this sound familiar? Promising to repay something with something you don't already have. Basically, you have to wait on Ted to repay Steve, to repay Jan, to repay Mark, to repay you, and so you can repay Fred, and so Fred can, yeah, real secure. So this problem is getting worse, right? This number is increasing since 2018, 2019, and in 2020, still 100% greater than 2019 after netting. All of this is making me wonder if the FICC's balance for the Treasury deposits. For those who don't know, FICC is a branch of the DTCC that deals with government securities. Just like the updated DTC rule for supplemental liquidity deposits being calculated throughout the day, FICC also calculates this amount as it relates to the Treasury securities multiple times throughout the day. Can you imagine how astronomical the actual margin must be? Holy moly, there's too much evidence from too many separate events pointing to the imminent default of something big. That's all this is going to take. When Ted can't repay Steve, it means the panic has already started. Just look how easy it was for the repo rate to spike overnight in 2019. We're already starting to see the consequences of the SLR update with Archegos, Nomura, and Credit Suisse. We covered them earlier 2 days ago. This is just a taste of what's to come. And now we have the bond markets represent an even bigger catalyst in triggering this event, and it's happening already. With that said, things are starting to make sense. Citadel doesn't need shares if their investment strategy is to go short on everything instead of going long. Why bother owning shares? BlackRock and other asset managers simply lend them to you when you need to pony up a margin call for stocks and bonds. Their HFT systems allow them to manipulate the market in their favor, so there's no way they could fail unless a bunch of degenerates all decided to ignore taking profits. But that could never happen, right? Wrong. We just like the stocks. This is not financial advice. As a reminder, this is essentially the omen right before the SLR requirements are once again exposed to a higher minimum, right? Because we have knocked out the bottom part of this denominator, this now needs to be bigger here. And as we've known, they could use this system to get more cash in a quick way, right? If they need liquidity, they could use these repos, the repurchase agreements, in order to be able to do that. However, right now we are seeing major manipulation and corruption in that system. And it's not like this is a conspiracy. This happened in 2008. This happened in 2008 and is likely going to happen again. We're going to give you guys live, up-to-date updates on this news story because we are live for 7 hours each day, bell to bell, and I'm looking forward to seeing you in a future live stream. Smash that like button for other Space Apes Moon Platoon members to find out about this story, and subscribe so we can get all the way up to 100K. We're on the journey to 100,000 subscribers, and we would love to have you aboard. Let's thank the people that have not only pressed that sub button, but also pressed that join button, the Moon Platoon, Meatball the Space Legend, and the Gorillionaire tiers, and we will see you in the money. How's it going, guys? That was quite a bombshell, not gonna lie. Man. So, GameStop bouncing off again like expected. So this is that corrective wave I mentioned before. The last time we had the corrective wave, we lost about 11 bucks. This is exactly what we're talking about. From 199 to 188, like clockwork. That $11 corrective wave here has now been finished. over with, supported, and now we are going to recontest that volumetric weighted average price. How's everybody doing right now, guys? How is everybody doing right here? Let's see. Let me go read some of your comments here. Let's see. Oh, man. Discovery squeeze? Okay. Remember, Discovery is not quite squeezing. It's just in a flash sale, thanks to Archegos. So Discovery and Viacom are in pretty much the same way here. Case it got lost in the chat. Curious why you cringe with pie charts. Oh, they're just a terrible way to visualize data. Let's look at this again. Right. In this case, maybe it's a good way to describe how small these things are, but you could just easily do this in a bar chart, right? A pie chart with volume in the middle. The only way that this could be like salvaged is if this entire middle chunk is taken, because volume is different, right? When you have volume as like in your brain, like, uh-oh, and I have no idea how much this is, you have no idea how much the difference between this slice of the pie and this slice of the pie is. If I told you the difference was 1 to 10, you would be like, yeah, but 1 to 20 also looks pretty much the same too, like corporate 2.6 to UST. That you couldn't tell the difference between 1 to 10 and 1 to 20. So that's why pie charts are misleading. Also, they're just not, they're frowned upon in the visualization world. How many hours a day is Mr. Meatball sleeping? Meatball, how many hours are you on? A little head scratch for Meatball. Oh man, NYPP is ripping today. I've heard a lot of rips earlier. I want to believe. Oh, I'm so annoyed at you. I'm so annoyed at you. Cannot believe I fell for that. Ha, ha. Just joking. I fall for these on purpose. That's the inside joke. My sense of humor is very weird. Okay, so what is going on, ladies and gentlemen? We are here to cover the stocks that you guys want to cover. We have the news that is just general, like legalese mumbo jumbo, but made sensical with the help of those of you in the chat and with the helps of Professor Meatball here. Thank you, Professor Meatball, for helping us learn a little bit more about exactly what to pay attention to. Let's see, what's max pain threshold about? Keep missing your coverage on it. Let's just do max pain real quick. Let's see if we can do it with chart. This is the SLR, right? This is the tier 1 capital ratio. Maybe I do the quick 30-second version here. No, where's the SLR here? Okay, fine. So let's put the tag here. Guys, if you guys still don't understand the SLR, the supplemental leverage ratio, it's also known as the tier 1 leverage ratio, and I wanted to explain it in 60 seconds. Let's say that you own things. Let's say you own your house, own stocks, right? You might own bonds, and of course you own cash, right? This cash is the most liquid out of your assets. Let's assume that there's also cash-like assets that you have. Those are all tier 1 assets that you have. The tier 1 ratio there is comparing how well would you handle a financial crisis, right? Let's if you had cash, you would be able to turn that around and put it into places like debts and liabilities that you need to cover for. However, if you didn't have enough of this and had too much of this, you are now under leveraged and are in a dangerous position to get screwed over by a financial crisis. Now, this rule originally had temporarily, for the pandemic, knocked out pieces of the denominator, trillions of dollars from the denominator. And if you guys know anything about ratios, this number gets bigger. That means that this number doesn't have to be as big. So people didn't need as much cash on hand. This gave people the opportunity to lend and find other people who wanted to borrow homes and stuff like that, right? This gave the economy a boost. However, that is ending on March 31st. Today, and now these are back on the denominator. Trillions of dollars are going to have to be added here in order to keep the ratio the same, and we're likely going to see some sell-offs coming on soon. If you guys like that video, like this video and drop a subscribe to help us on the way to 100,000 subscribers, and we will see you in the money. Okay, so that's a SLR. And now that I've used this part of the whiteboard, I can talk about going back to WeBull in just a second, guys. Okay, so what was the question again? It was about max pain. Okay, so max pain is the idea that we have calls and put options here, right? Let's say that you have puts mainly like less than your calls. So let's say that these are puts, and then these are calls, right? You might be surprised to hear that hedge funds make money on both sides of this. They could short the stock so that their puts go in the money, and when they go here, then they wait until the stock rises again, either because we buy in or another reason, and then they buy calls, and then they also make money again. If the price jumps back and forth, max pain is the idea that usually the person that makes the most money is the person that has the most data, the most analytical technology. So right now, max pain is the idea that if you keep the price right between the major gamma ramps on either side, that forces people that make a lot of these options to have their options expire worthless. So that is the main idea, is that we can keep AMC, for example, or even GME, less volatile than it normally is, and people with the data think that it's going to be sliding back and forth and they can make a good amount of money on it. They are going to have their contracts expire worthless, and that is good for the people who want to inflict max pain on the contract holders. If you guys like that explanation, then go ahead and drop a comment down below if you wanted to see a longer explanation for max pain, or if you wanted to be able to subscribe to start in your own financial journey and start investing in yourself. I would appreciate it. Go ahead and hit that bell button too, and we'll see you in the money. Let's see. I don't speak Korean. All right. So DTCC is the dad now. Let's cover why DTCC is dad. Till I didn't read, DTCC is the dad of the market now. Let's also take another look at the technical charting here. If you guys did have a stock that you guys want us to look at, we have been covering a good amount of news. That one in particular was quite long. So if you guys want a concept or a stock ticker, let's start doing 3 more stock tickers right now to continue learning here. What I'm going to do is I'm going to change the thumbnail. Spaceship. What is Meatball? There we go. Your daily dose of stonks. Let's see. Will Q1 cause squeeze? Q1 and cause Spoon Platoon. Let's go. Spoon Platoon, how's it going? Let's see. How do you think the sell-offs will affect GME? Of course, I love the stonk hodl, says Ryan Azadi. The fact of the matter is, these larger institutions don't, unless we're talking about the long whales, don't have long positions in GME and AMC. Otherwise, they would cover. So they're the ones with the short positions right now. Sell-offs mean that you have to sell off your bonds, your securities, maybe your mortgage-backed securities and other stuff. But you're definitely, if you're expecting that the Citadels of the world are going to jettison their GME, likely not, because they don't have enough. Otherwise, they would cover. So let's see. Cody Blakely, thank you for joining the Moon Platoon. I appreciate it. That's awesome. Thank you so much. Okay, so someone wants me to look at AC. So let's look at AC real quick, and then maybe BCLI. Ooh, Spoon Platoon, let's go. Spoon City. If you guys are confused of why it's called Spoon Platoon now, we'll have a video on April Fool's, 20-second video of my blooper when I say spoon instead of moon. What are we talking about? AC? Okay, Associated Cap Group. Oh. So I'm on the hourly chart right now. So this is all the way back in November. Seems like there was a series of impulse leading into corrective waves here, but in the macro scale, it almost seems like consolidation. A small dip from 35 to 30, right? And then just a solid stock, just not even really being torn by the volatility of the market. I would say right now that this is not an attractive entry point by any means. However, if you're holding, it doesn't seem like this stock is going to, the risk reward here is the 38 recontested 3 times resistance here, or the 33 one-time contested support. So I would say that this is actually more likely. So for 38, in my opinion, that makes me more bullish on the stock than the risk of it dropping back to 33. So I'm bullish on this stock. I would say that a more attractive entry point would be below the EMA, but that's up to you to decide. Janews. I think I did Janews yesterday. Let's do it again. Genius brand. Mr. Ryder, scissors are okay in the chat. There's no need to time people out. They're just putting scissors in the chat. Oh, okay, if I want free money. I do. I really do like free money. We're going to go back to GME and AMC in just a sec, but of course you guys can just watch the charting as my bounce is predicted. This impulse, so this subwave right here is 187 to 192. It's a $5 subwave. This $5 subwave, we are looking at 2 out of the, so 1, 2, 3, 4, 1, 2, 3. 3 parts of this impulse wave, $5 each with a dip of $2. That's a $3 net each wave. That means that we are likely going to recontest this 195 with the next $3, and likely this would be able to push us over. If we do recontest the VWAP and go over, we're likely going to start seeing 200 again. So watch the charts closely for GME. Oh yeah, let's look at the options here. Here's the options. So this is for GME. We have, wow, just a pure battleground right here. So there's not a lot of like weird deep in the money calls this time. 180 if GME slides back to that level down underneath 187, unlikely, and at 200. So at 200 and then 220. And then 225. Interesting. So there is roughly another $1 million worth of calls going up to 230, and then yeah, another $500,000 worth of calls all the way up to 300. That is added on top of the roughly 10 million worth of calls from yesterday. So as of right now, there's, yeah, I would say roughly $10 million worth of calls up to $300 from today and yesterday. That's not bad. That is pretty significant. Okay, so oh wait, what's the answer to the question in the title? The SLR rule is something that we really do care about. So, and combined with the fact that the ex-SEC regulator had us point our attention to today of all days, we're likely going to see some exciting stuff happen maybe at the end of day. Okay, so Genius brand, I drew out this. This was a stock that I drew this ascending channel on, but then yesterday it started to dip. That ascending channel I drew knowing that this dip already happened because this happened yesterday. I was looking at Genius the other day here. This likely is a result of over speculation and bullishness on the RSI. So let's look at the RSI here. Pushed over 70 a couple of times here. You can notice that the MACD here had a sharp deviation right here. And unfortunately, if you did sell there, you would already be down 30 cents. But at the very least, you would still continue to notice that deviation in MACD. You would have been able to get out here at least. Now that we're trading sideways, a big equal and opposite green candle at the beginning of market, I would say that Genius is likely to reverse and recontest that EMA after today. However, as of right now, let's look at the 30-minute chart, 5-minute chart. So this 5-minute chart, as it dips below this certain level at $2.08, yeah, I would say that this right now is on its way up to recontest the VWAP. If it does, watch it go and surpass the VWAP here. That's a good opportunity for it to recontest $2.40. Can I pet the doggo? You want a pet? I'll give you a pet. Cody says, glad to have become a member. Greetings all, and thank you all for what you do. Andrew, Cody, I appreciate you. Thank you so much for joining. Let's see. In discussion of what came out of the third bridge, not to my knowledge, which means that I guess there is not a ton to talk about. Let's actually look. GME news here. Why GME shares popped 12.7% today based on Motley Fool. Wow, really? Yahoo Finance is really just creating this ridiculous FUD here. This title is literally Forget GME. Are you? Wow. Wow, wow, wow. So we saw that GameStop adds another Amazon executive to the team. That was yesterday. ATM offering might pop the bubble. Okay, so let's go back and look at if anything did get updated on GME. Everyone's out here looking for Sokka's girlfriend. That's amazing. Oh man. Oh boy, yeah. If you guys aren't aware, Sokka's girlfriend is the moon. We're looking out for the moon, guys. Biggest anomaly here. The truth why 5 million per share is not a meme. Okay. Kelly Durkin. Oh man, did you ever imagine in your life that you would become a small internet sensation when you took a new role? Interesting times you live in, but congrats on the new role and becoming an internet celebrity. Kelly responded to this person. Love these customers. They are so loyal and will make them happy. They deserve it. Aw, Kelly. Jean-Jacques Rousseau. Alexis Goldstein will be here on Friday. We'll cover that AMA. Kramer will not do an AMA on GME. Okay, wasn't expecting it. Among Us plushies are officially at GameStop. Nothing sus about that. Okay, well, enough of that. So we now have to actually pay attention to this. I'm going to include this everything short in the description here. Everything short. Boom. And a picture of cats. This is Ron Burgundy. DTCC is dead now, so that's on deck. If you guys did have a ticker symbol, I do want to hear it, learn from it, approach it. So give me a chance to check a couple things, make sure that I am all good. Apes strong together, says Ichiba Senpai. I agree. Apes strong together. So I am gearing up to talk about this DTCC new rule because, as a reminder, we're waiting for one more. We're waiting for 008, and that is going to make essentially everything pop. If that pops, boy oh boy, nothing is going to be the same after that. Yeah, pretty lazy day today, actually. Oh. Let's see. Okay. All right. Active SEC rule making on NSCC. Okay, cool. Gene giving us the facts here. So this is the legit NSCC rulemaking commission, thanks to Gene. If you're watching right now, we saw that this got filed, and the 004 got filed yesterday. We covered that 004 earlier today, I think. But that got filed yesterday, and now we're talking about this new one. Recalculating contributions for FICC's Doomsday Fund. FICC is recalculating contributions to their Doomsday Scenario Contingency Fund, effective April 1st, which is unusually soon. It's from the Government Securities Division that's not related to GME, but it affects many parties that may or may not be involved in GME. Boom. Aha, see? Broke the VWAP. Okay, so GameStop breaking the VWAP is pretty big. This is exactly the same size. This is the channel that we were talking about, ladies and gentlemen. This is that same channel. $5 sub waves here, pretty much exactly as predicted. Now this is the way that I've charted this out is likely going to have it make a hard or soft rejection here at 195, and then return to the VWAP to consolidate and then push. If this channel is correct, we should see the a successful contesting by 11:26 in about 20 minutes. 20 to 30 minutes, there should be a successful contesting of 195. Pay attention. Do hedgies really think we'll sell? Exactly. Okay, thanks for hanging tight. Ooh, that scared me. Scissors in the chat. No Fs. Scissors in the chat instead. We're back. We're beautiful. We're back in business. All right, so let's grind through the Fixed Income Clearing Corporation here. It's a regulatory agency that deals with settlement and delivery of fixed income assets, right? So that's why Fixed Income Clearing Corporation, FICC, ensures the systematic and efficient clearing settlement and clearing of U.S. government securities and mortgage-backed securities transactions. Essentially, they were a big part of Big Short back in 2008, right? So there you go. This is just a part of the DTCC. We've been talking about DTCC for a long time, and this is one arm of it that is making big moves. The FIC wants to change certain parameters of the contribution that each netting member needs to contribute to the Capped Contingency Liquidity Facility, the CCLF. So what it counts as a fixed income, right? Treasury bonds and bills, municipal bonds, corporate bonds, and certificates of deposits are all examples of fixed income products. The ruling coming from the Government Securities Division, they are responsible for U.S. government securities, which are the largest sector of the fixed income market. They also have a mortgage-backed security, MBSD, which they have a CCLF of approximately $35 billion, according to the last data from 2017 to 2018. Was I right? Okay, so we're seeing this 1, 2, 3, 4, 5, 6-part subwave. Hopefully that this is going to now push us through 195 and then land us here instead of having to drop all the way back down to my line, my channel, and then push past. That would be ideal to get a little more buffer in the way here. if AT&T does drop my internet because my entire area here is being currently repaired, just know that I love you guys, and I will be back by power hour. But no, I'm not planning to go anywhere unless AT&T rips me apart. Oh man.